All right, cool. Yo, guys. I just want to talk a little bit about targets and where you usually should look for targets when in a trade. Well, not necessarily in a trade, but doing your analysis, you need to look for targets because you need to know where you want to expect price to go to. So you need to know whether or not you should still be looking for fair value gaps, which is the pullback area, fair value gaps. You need to know where we're going to target next. So you need to know so you'll be able to determine whether or not you should still be looking for pullbacks into the fair value gap. And there's a really, really easy way for me to say this, to explain to you how to set targets on your analysis and where you should expect price to go to. There's a simple way of understanding where price moves to. When the markets are trading and price action is trading, it tends to target two areas. One of the areas that it targets is fair value gaps. The other place it targets is liquidity. And as I mentioned to you guys before, liquidity is usually found at the highs of the market, which is up here. At this point, it was up here. Or it's found at fair value gaps, which is within these areas here. So if we was looking at this market from this point here, so price was trading at this area, we had price go up, then we had a stall, price continued to go higher, and then we was looking for an area to position within this fair value gap. And we managed to get into a trade somewhere inside this fair value gap. Let's say we positioned here. Where would we be targeting? So as I mentioned, there's two places price can go. We can either go to a fair value gap, right here, or we could go to liquidity at the top. So when you're looking for trades and you position in the market, or let's say you're looking to position into the market and you want to try and determine whether or not it makes sense to get into the trade that you're looking at based on where the targets would be, you want to always highlight near levels of fair value, and you also want to highlight the next level of liquidity, which would have been here and here as well. So we've got a level of liquidity here, a level of liquidity here, and we've got a fair value gap right in between here. But we already know this is a major fair value gap. So as soon as we get above the fair value gap here, as soon as we get above it, now all we're targeting is our levels of liquidity. Boom, one taken. That's the second one taken. So when you're getting into trades, the only thing you need to look out for is fair value gaps and liquidity. Let's see if we can find some more opportunities to see this. Okay, so we have a market structure shift here. The first place I'd be looking out for is a fair value gap. So where can I identify the fair value gap to be in? I can see a fair value gap right here. I can also see a spike on the market, but because it's within our fair value gap, we're already targeting the fair value gap. So we need to watch out for this level. If price fails to get below this level, then we know that we're going to continue or potentially bounce into an uptrend. However, if we decline aggressively through the fair value gap, it will tell us that price is actually not respecting the fair value gap and potentially we're going to go lower. Let's see what happened. Price traded through the fair value gap, and where did we target? So now I'm looking at other levels of fair value. Where could we find another level of fair value? We've got this massive fair value gap here anyway. But if I was to remove that one, in the opposite direction, we've got a fair value gap here. And then after that, we've got liquidity resting here because there's always liquidity at the spikes. So although this is a massive fair value gap, we know we need to try and get inside the fair value gap. And then once we're inside the fair value gap, we need to determine whether or not it makes sense to hold the trade through the fair value gap. But just a quick note, I advise you to always target fair value gaps. If you take a trade in a particular direction and there are fair value gaps on the opposite side, which is on the downside, you want to make sure that you exit your position within a fair value gap. Let's see what happens. We go through both the fair value gaps and then we target liquidity. Let's see what happens after that. After we target liquidity, price starts making a move higher. Now, we came back into the high of the fair value gap. This fair value gap right here. So this could be seen as an opportunity to sell the market back down because this is a fair value gap. And as you can see, wick here, we saw price go up and then we printed another red candle. That could have been an indication that there was going to be further downwards movement. We broke the fair value gap and now we're retesting it. We held this level of support. But if you take a look at the chart from an even bigger perspective, what is actually going on here? Well, we had price rally higher, we pulled back, then we rallied here, and now we made it a lower low, because this low is below this low. Then we pulled back, we tried to make another low. Now, at this moment in time, we have a fair value gap right here. This might be a bit confusing, but you'll come to understand this as time goes on. If this fair value gap holds and price breaks to the upside, we should be targeting these all-time highs. Why is that? Because if we make a higher high here, there is nothing to stop us, and this might not make much sense, but there's nothing to stop us from going lower. There's no fair value gaps. If you take a look, it's only this, and even this is not much of a fair value gap. After that, we've got no fair value gap here, we've got a fair value gap here, tiny one, and then we've got no fair value gaps after that. So let's take a look up and see what happened. Price swept liquidity, we made our market structure shift, price broke through. Now there's nothing to stop us. What happened? We got to this level, we tapped into this fair value gap, got to this level, and then we started having price fluctuate until we shifted, and then price started going back down. So the point I'm trying to make is you want to target fair value gaps and you want to target liquidity. If price broke above this fair value gap and continued going higher, the next level we'd be looking at is the liquidity resting at the all-time highs. So at all times in the market, you want to pay attention to fair value gaps and levels of liquidity. And when I say levels of liquidity, all I mean is spikes in the market, because this tends to be where price targets fair value gaps and liquidity. That's all it is. We've swept liquidity down here because we've got spikes down here, and this is a major low. Where did we come back to? This is a fair value gap. This is a fair value gap. So if I combine the two, we came back right to this level. You'll be able to notice a lot of these things the more you look at the charts and the more you analyze the markets. It's not going to come all at once. You're not going to be perfect at predicting the market, but at some point you're going to notice these things. And when you do begin to notice them, I want you to journal them. It's extremely important. And then at this point, we started looking at this trading in a range. So this is just what I wanted to explain to you really quickly. As I've given you a system to trade, I haven't actually told you how to set targets. And the reason setting targets is important is because you want to know whether or not you should continue to buy the market if we're trading in a trend. So that's why it's extremely important that you understand where to target. You always want to target fair value gaps, and you always want to target areas of liquidity, which is the highs or fair value gaps in between, but it's either one or the two. And the more you look at the charts, the more you'll see that price tends to target liquidity and fair value gaps. And once you get a break above it, this is where all the buyers came in, and this is when the trend started. And if you can just look at these charts a little bit, do your own drawing as well, and try and figure out if you can understand why price is doing what price tends to do. Because it's extremely important that, once you start trading, you know what to look out for. And once you become more familiar with this, it will become a lot more easier. Nevertheless, I'm going to leave it here.